Okay, so continue with this with the video cast. As I was saying, when I start to see a pinch Bollinger of this magnitude, and this is happening on a daily basis, where you have you can see that clearly what's going on. Let me just get this out. Okay, right there. And a pinch Bollinger simply signifies that you are about to see an outsized move. Now, depending on all kinds of other stuff, how overbought we are, what the macro conditions are out in the market, what kind of news is coming out of the Federal Reserve speakers, Mario Draghi's press conference tomorrow, all kinds of stuff. Lots of very important confluence of events. It's tough to tell if it's going to just directly break out or we come back, retest again the lower end of the pinch Bollingers, which would be around that 1850 level, 1860 level of the S&P, and then move up. So whichever the case, what you're looking at here, if you want to look at it in a simplistic manner, is we are in a trading range, and the best way to look at it is, and if you review my other charts that have been posted, I've shown this too, so nothing new here, but just reminding people. Let me do this. So here's the lower end of the trading range. If you got to track the futures if you're somewhat of an active trader or anybody who wants to understand why markets do what they do. The lower end is here. You can clearly see there are multiple tails and multiple bottom reversals of this level. So that's pretty solid for now. And then the upper end is here. So once we break out of the upper end, that's when you start to engage the 34 and the 50 and the upper end of the channels and all that stuff. Right? Not that hard to understand. So now you know. Let's move on. So let me show you. Let me get there. Bingo. Let me show you the dynamics of what really happened in the market today, okay? So here's Wednesday, and we had this massive explosive rally on the euro, primarily caused by the powerful drop in the market of the US dollar. And you can see that clearly what's happening here, right? It just fell off the boat. Now, very simply, without getting into too much detail, lower US dollar, great for commodities. Simple. Makes it cheaper for the rest of the world to buy oil and all kinds of stuff, right? Oil's priced in dollars. So oil prices shot up. So lower dollar, higher commodity prices. Simple. Simultaneously, the euro shot up, right? And this was the main cause of the oil rally, period. And we were reaching some bottoms there, which signified that maybe oil is creating a double bottom. And let's see if we can get that. So let's take a look at oil. That's the only thing that's driving the markets right now from what it seems. I did say over the last couple of days, it looked like oil was decoupling from the market. So when you look at this chart here on oil, here's the $37 mark. Let's go back a little bit. Not that we need to. That's a little bit too much. Let's stick to the 1 hour charts here. So what you're seeing here is very powerful. If you wanted to look at it from a pattern symmetry, I mean a pattern standpoint, you got a head here, you got a left shoulder, a right shoulder, you got a multiple right shoulder, and then the move up. Here's your neckline. It's an inverted head and shoulder, right? It's an inverted head and shoulder. IHS. Head and shoulders bad, inverted head and shoulders good. You should know that by now. And if you don't understand anything about technical analysis, then for God's sakes, review all my videos and or not all my videos, some of my videos, especially the basic one for the beginners coaching session. It's out there. The sample is out there. It's on the website in members area. It's also which connects you to the Clueless 8 YouTube channel. So do some work. Otherwise, you're going to keep on losing money in the market. Okay, just the fastest way to do it. Your stupidity will make you lose money in the market. No question about it. Just letting you know. Stupidity and ignorance, I should say. So if you want to stay on that old bad habits of your past years, then continue in that path. If you want to do the clueless mottos of 2016, and believe me, I follow them too. I'm not just mouthing off here. I'm far from perfect. I do stupid things too. This volatility-driven market can make people, grown adults cry and make them act like complete idiots. So, but you got to practice discipline. Shed the old habits and bring the good ones out. Kill the old bad habits and move on. It's not easy to do. That's why they're called habits, right? So, saying all that is, so you got this here. So the upper end of the range that oil can move to, in my opinion, is 34. Once it hits 34, right, it did here, might get a little pullback, okay, this type of pullback. It comes down to about 33, and from that point, it could make a beeline towards this $37, $38 level. And that would complete the pattern symmetry. In my opinion, oil trades between 30 and 40 bucks for the near term. Now, getting down to its 30 is when markets get really jittery. So I would say once we enter this zone, oil probably trades between 34 and 40 or 34 and 38, whatever the case may be. But this pattern, when you look at it, is starting to look pretty reasonable, right? Pretty reasonable. So it's almost a perfect pattern symmetry. You got, like I said, the head. You got multiple left shoulder, right shoulders. Looks like support has been established at around 29. I doubt we're going to go see this 27.56 level, but who knows, right? And so that's always there. But looking at this pattern, initial target is 34. So market rally continuation, over the next couple of days, going into next week. And then a little pause like it did here. So perfect pattern symmetry would be once it hits this level here, needs to dip a little bit. So let's say once it hits here, right, it does this. It pulls back a little bit. Once it goes here, pulls back a little bit, and then at that point goes higher. So markets now in correlation with what the markets can do, obviously that's when the markets would go towards that 1990 2000 level. And I think that caps the rally. That's just my opinion, right? That's my opinion. There's a lot of problems out there that need to be addressed, especially global issues, currency wars, the Chinese issue, all that type of stuff, before the market can resume a sustained uptrend in between pullbacks and back and forth like we were doing before. Even then, keep in mind that volatility is here to stay and you are not going to run away from it. You can't run away from it. And there's a lot of money to be made, and we're showing it every day. Not every trade has to be a winner, but net, you look at your portfolio on a weekly basis. That's the best way to do it, or even on a daily basis if you want to do it. And it's tough on a daily to see a green P&L every single day. It's tough business. Okay, but you can do it. You got to put in the work. All right, so there's your oil picture there going on, and so at this point, don't be surprised that we hit some resistance at even some resistance here at this level, because that's a supply zone right there, 33. We just don't want oil to just basically go like that and hit this again, because the minute you start it, again, that's why you got to watch oil. You got to watch oil. Simple. It's not rocket science here. Because if it hits 33, doesn't even get to a 34, even gets to 34 and starts to really, pull one of these, let's say it goes down here and then decides to come down to a 30. Because remember, we talked about 30 before. We slipped a few cents below 30, caused a panic, and then decided to just rip higher. And the lines and stuff is starting to curl, so that's a good thing. So, but let's say we're 34, and then we are starting to do this again. You can rest assured that you got to be short the market at that point. Selectively short the indices and things like that. Just the way it goes. All right. Let's take a look at the S&P 500. Showed you oil, showed you the US dollar. Now, if you want to see what the US dollar looks like, look at this. This chart, if I showed you this chart, you wouldn't be a buyer of this chart. But then at the same time, on a daily basis, it's deeply oversold. You can see that it hit 97. It seems to be a support here. So if the US dollar starts to rip again, I can assure you that oil's going to come down. So you got to watch this too. I mean, I do most of the hard work watching all this stuff and putting it out there, but at least now you know. So there you go. If the dollar breaks below 97, this is the next level we're looking at. We're looking at, we literally can come down towards the 94 level. You're going to have a humongous rally in commodities. Humongous. And that's good because that higher commodity prices allows these companies to refinance their debt and all that kind of stuff. So it's kind of a chain reaction. I believe that there was major central bank intervention today in propping up the euro and selling the dollar. The invisible hand came into play because that was just huge what happened. Okay, let's see. So looking at the S&P here, this is where we are. This is where we are. This is the channel that I drew. Massive hammer reversal. Didn't want to mess with that. But these days, these hammer reversals seem to increasingly get hit. And all of a sudden, that beautiful hammer reversal you're looking at, this glowing hammer off the lows at 1870, 1871, gets reversed. But let's see. In pure technical analysis, this hammer reversal should carry out and get towards there. Get towards the 1938 level. Again, this 1935, 1945 level is key because once it breaks out over that, it's going to hit the upper end of the range, which is 1970. So that's how you got to play this. Now, this is a daily chart. Let's take a look at the hourly chart. On the hourly chart, you can clearly see here we got deep oversold by 1 o'clock yesterday. And today, despite the pullback by 1 o'clock today, despite the pullback that we saw here, 10 o'clock, you could see here if you're following the stochastics that the stochastics were still turning higher. So that was telling you this market was going to bounce. Look at this. The stochastics kept on trending higher despite the fact that we fell so hard. Clue to say trading alerts made money both ways, long and short. We know that. So at this point, we got to get over 1920 in order to get towards that 1940 level. Once we break that, then we're starting to see some nice numbers at around that 1960 or so. If you do not think this is important, that the S&P and the E-minis and specifically are important, and you're trying to trade this market, you're a lost child. Just letting you know that. All right. So you don't want to be a lost child in the woods, okay? A babe in the woods, right? Because the wolf is going to come and eat you. Just going to bite you. So, and the wolf are those algo HFT programs that are hunting around, to take your profits away. So that's basically what it's all about. And so keep watching this channel. See what the channel entry and all that works. I have a ton of great looking charts that I put out there today. Keep in mind, you have to sit for the advanced coaching sessions, spend some time and a few bucks, learn it, apply it, and see the difference it makes to your trading. That's all I got to say. Have a great evening. We bought a bunch of stuff after hours that all worked out. It's been a fantastic day, and thank you for your support, and good night.